Alright, now we're gonna move and look at tax admin, tax compliance. Okay. So these are all pure rules that you need to learn, and they will let you know that as a taxpayer, what responsibilities do you have. Okay. And obviously, after knowing that inland revenue can be so powerful, usually students get afraid that wow, it can be that bad one. Okay, so it's good that you must have some awareness. Now the administration part we divide into 4 areas. So we will start with looking at return and assessment. Okay, so return is declaring, giving back is called return. So it's a process of how we declare information to the inland revenue, like how we declare our income is called return. So it's called a tax return. Assessment is the order to pay tax. So you have an assessment means you need to pay tax. Now, then we will move on and look at how to do tax appeal. Okay, so tax appeal is basically the rights of the tax holder, that if you're not happy with something about your tax, then how can you appeal? And then maybe you'll be able to win the case, and then it will be to your favor. So we're going to see the process on how to do appeal. Now then we will look at the various collection system that we operate here in Malaysia. So how does Malaysia operate their installment scheme, the pay as you earn scheme, and then how do you make your tax payment? If you make late payment, then what happened and stuff like that. Then finally we will summarize again different offenses and penalties for taxpayer. Okay, now all these things that we do, we only look at the administrative part of income tax liability. So it's not about other taxes, it's about income taxes. Okay, alright, now the first thing that I'll discuss with you is this. Now page 225 refers to agent. Okay, page 225 refers to agent. Now actually, what is an agent? Now you see, like take example, like for your cases, if you need to pay tax, who will fill in the tax return and submit to the government? Who will do it for you? You do it yourself, right? Okay, so you take the form, you fill it in, you sign the form, and you send it back to the government. Now that's because you are acting as an agent for your own tax affair. Okay, because you can represent yourself. Because now, but we have cases where there are taxpayers that they are not capable of doing so. Okay, let's say for example, okay, that assuming there's a rich man that he just passed away and left behind his only child, one child, and the child is 6 years old, and the child will inherit all his estates. That means the child will be the owner to his business empire. The child will have everything. So the child becomes very rich. Now 6 years old, do you think the child needs to pay income tax? Don't need. Don't need. Well, then income tax planning very easy. You just put everything to be under your son, then don't need to pay tax. No such thing, right? Okay? Now whether you are 6 years old or whether you are 20 years old, there's no difference. Even you are a monkey or a dog. Now Malaysia cannot. Overseas can. Overseas you can have your estates leave behind for an animal. We don't have law here, but you have laws in overseas that you, because a lot of people very lonely out there. They trust a dog more than they trust a human. Correct? You think and see, human betray you or dogs don't betray you. Okay, and then human, you talk problem, then the person will answer you back. You talk your problem to a dog, the dog cannot answer you back. Okay, so it's like a lot of people out there are like that. So there are a lot of rich people that they left behind their pets and leave all their assets for their pets. Okay, so imagine if the same case happened in Malaysia. If you have a monkey, you leave behind all your estates to the monkey, then you die. The monkey got to pay tax or not? Of course, you still have to pay tax. Okay, now my question is not paying tax. My question is, how do you think a monkey or a 6-year-old child can fill in the tax return form and submit to the government? Can or not? Cannot, right? So that's why in that case, we need an agent. You see now? So the whole idea of an agent is to handle the tax affair of a taxpayer. That usually we are referring to taxpayer that they are not capable of handling their own tax affair. Okay? Now example, like we say, minor. Okay? Example, like for instance, you're in overseas. Let's say I got a lot of property here that I rent them out for rental, and then I decided to leave Malaysia. But I'm not selling away my properties. Okay? I still have all the houses, but now I'm staying in Australia. So every year I need to submit my tax return on the rental income, but then I'm not here, it's very inconvenient. So the Inland Revenue can always appoint an agent. Okay? Now who can be my agent? Maybe my brother, maybe my sister. So anyone that the Inland Revenue finds is suitable. Now, so the whole idea of having an agent is to handle your tax affair. Now, so when agent needs to handle your tax affair, so in the event if the agent does not do his work, then who should the government punish? The taxpayer or the agent? Okay. The monkey needs to pay tax. The agent needs to fill in the form. Now the agent never fill in the form and never pay the tax. Who goes to jail? The monkey or the human? The monkey. You blame the monkey for not filling in the form. You must blame the agent, correct or not? So that's why it's not the taxpayer. So the moment we have an agent to deal with the tax affair of a taxpayer, the agent will usually be liable to all penalty as if the offenses of the taxpayer will be his own offense. Understand? So it's as though that you are the one doing the work and you fail to do it, and then you go jail, you pay penalty. Okay, so that's the issue about agent. It's a very small issue only. Follow? Okay, move on. Now, we need to declare information. Example like our income to the Inland Revenue. Okay, we gotta declare. Now you don't declare, how will the government know how much you earn, right? So you need to declare. Okay. Now to declare your income to the government, we do it by way of submission of tax return. That's what we call it. It's a tax return. Okay. Now we differentiate different categories of chargeable person by way of the form. If today afternoon you remember the tutorial question, there was one part that I didn't do, that the question mentioned about the B form and the BE form. That is the questions that they're asking now. They're talking about tax return. Okay. Now we have different tax return form for different taxpayer. Now, so the one that you need to know, basically, is B and BE. Okay? If you are in the tax line, these are things is very common to you. It's almost in every part of your working life. Okay? So what's the difference between B and BE? Now B form is for individual, but the difference is B and BE is to differentiate those that they have no business source and when they have business source. Okay, so an individual without business source, the form they use is BE. If they have business source, then the form that they use is B form. Okay, that's how you differentiate B and BE. Okay, so not only the form is different, of course the details that goes into the form is also very different, and then we also differentiate it with the due date. So we give different due date for different types of form. Okay. Now besides B and BE, the other one that you must know is C form. Okay, and C is not very difficult to remember. C stands for companies. Okay, this is C form. Now there's only two types of person that you learn, alright? Individual, company. So B form, BE form, and C form. Okay. Now the different forms carry different due date. Okay, first of all, the due date is like this. Every person is chargeable person. All of it. Except, that's why I say other than company, trust, or cooperative society. Except these three. Now because trust, company, and cooperative society falls into one category, okay, and the rest of the person fall into the other category. Follow? Now, so individual will use this one. Example, individual will fall into any other person. So you and me will apply the rule here. Now the law says in section 77 that every person other than company or trust or cooperative society shall, for each year of assessment, to furnish to the Director General a return in a prescribed form. Now in the law we never name the form one. We just say that there is a prescribed form. Okay, that means there's a specific form. But the only difference is in the practice we tell you what's the name of the form. That's why in the law you don't see they mention form B or BE or what. They just say prescribed form. Okay. Now, but we know the form is B and BE. Follow? Now, so the law says that you will need to furnish a return using a prescribed form if you are carrying on a business not later than 30th June in the year following that YA. So most students can write 30th June, but most students cannot write in the year following that YA. So please remember that. Because in the exam, you can just tell me 30th June is useless one. You will still be marked wrong. 30th June what? Okay? And the best the student like to write is what? 30th June next year. They like to write like that. Okay? But this is not right. What do you mean by 30th June next year? Next year is what year? Can you see or not? Okay? So which one are you referring to? So please, the phrase is in the year following that YA. Okay? Now, anything other than A. A is the first one. That means there's no business now. I.e., when you have no business, then it will be not later than 30th April in the year following that YA. So for example, e.g. if I use BE form for YA 2013, okay, the last day for me to submit is 30th of April 2014. The year following the YA. This is YA ma. The year following is the year after that. So that's why YA 2013 is 2014. Now, remember we use the word by to describe the due date because we're telling you the last day is on 30th April. But you can submit earlier, right? That's why it's before and up to 30th April. So use the word by. Don't say before, don't say on. Okay, then your answer is wrong. Okay, if I use B form, then the due date is by 30th June 2014. Okay, now see here. The law says that every person has to furnish a return, provided that person has a chargeable income for that year, or the person has no chargeable income for that year of assessment, but has a chargeable income or has furnish a return or has been required under this Act to furnish a return for the year of assessment immediately preceding that YA. What does it mean? Okay. Talk about a guy that just graduated, fresh grad, that in 2013 he has a job that his income is about 24,000 a year. Got tax to pay, 24,000. Got tax to pay. You minus your relief, 9,000. You minus your EPF, let's say 2,000. After that, with very little CI, you minus your rebate. There's no tax in it. You know? So in that case, you know that 24,000, you're not going to have a tax liability. Now, if you have no tax liability, what do you need to do? Nothing. Okay? You don't have to declare and go to Inland Revenue Office and say, hey, I got 24,000 a year. Do I need to fill in anything? You don't have to do anything. Okay? You have no responsibility at all because you're not chargeable. Follow? Now, let's say in 2014, you perform so well, your boss give you a salary that is 78,000 a year. Wow, suddenly huge promotion. That now you have tax to pay, fair enough? And this is going to be the first time for you to pay tax, because all the while you have not been paying taxes before. So as a taxpayer, if you know that you're chargeable to tax, that you got tax to pay, what must you do? By 30th of April 2015, you will have to notify the Inland Revenue, and then you submit your tax return. Okay? Of course, the tax return is for 2014. Now, that's your responsibility as a taxpayer. Okay? So you will have to inform the Inland Revenue, and then you must get a tax file number and submit a tax return. Okay, so 2015, you become jobless. Okay? You have no income. Alright? You have no income. So definitely you're not going to pay any taxes, right? So now the question is, do I still need to submit the return form? That's the duty, right? So you will still need to file your tax return. Okay? Because the law says that the moment you file the return previous year, then you have to continue to file the return this year. So you have to go on. So this responsibility will not end. Okay? No doubt that you say that I got no income, you fill in with all zero, because you know. And if you don't file in the return, it becomes an offense. Okay? It becomes an offense. Now the offense is on conviction. Conviction means we charge you in the court. Okay? We charge you in the court, and that you are proven guilty of this offense. You'll be liable to a fine between 200 to 2,000 ringgit. You can get a jail term of maximum 6 months, or you can get both. So the form is very important. So some people are thinking that, no tax, don't need to file one, then don't bother. That you don't bother, you got no tax is one issue. Then after that, you're going to get an offense and you get a penalty over here. Okay, you know? So even you file in the form, you don't pay tax, it's not so serious. You pay tax and you don't file in the form is even more serious. Okay, you know? Now we're going to learn all that later. Now, move to the back. Okay. See, for you and me, we understand that by the due date, go and inform the Inland Revenue, that's all. Now what about foreigner? If there's a foreigner that he comes to Malaysia and then he expects he's going to pay tax, what must a foreigner do? Now, for individual who arrives in Malaysia, that means we are referring to foreigner, okay? Individual arrives in Malaysia, and for that particular year of assessment, the individual is chargeable to tax, okay? He expects that for that year, he is chargeable to tax. or he is not chargeable to tax for that particular year, but he is chargeable to tax for the year of assessment following that year, also can. Okay, either is chargeable to tax for that particular year or for the year of assessment following that year, then he has a duty that within 2 months from his arrival to give a notice to Director General. That means he will need to inform the Director General and register a tax fund. Now that's the job of a foreigner. Okay, that's the job of a foreigner. So that's why if you're going to be a foreigner and you want to go to people's country and you believe you're going to get some income from their country, it's your duty to find out their tax requirement. Right? Let's say you want to go out overseas and work, you don't just go there and work and then go back. Before you work, you must ask, as a foreigner, what do I need to do? That's why again, if you fail to do, then you can't blame people. This is your problem. Because so that's why to this foreigner, if you fail to do that, then upon conviction, now you see again, we mentioned that the fine is 200 to 2,000, maximum 6 months jail or both. Now you're going to see this again and again because this is the standard penalty we have for tax offences. Paling ringan, the lightest is this. Okay, so all the small offences are like that. The more serious one, the rate is higher. The jail is longer. Okay, right. So this is for individual. Okay, move on. Now just now we say that the other category is company, trust, or cooperative society. Now, so the one relevant to us is company, right? That's what we study, company. Now, what is the due date for company to submit their tax return? Is within 7 months from the closing of account. That means 7 months from your year end. Okay, 7 months from your year end. So if let's say your year end is, December 2013, then you just take 7 months from here. That means by 31st July 2014. Okay, by 31st July 2014. Now that will be your due date. Follow that? That will be a due date. So this is due date for companies. Now, so I give you an example. If you operate different year end, usually what's the latest submission for you? What's the date? Follow that? Okay. Right, so there's the duty to submit tax return. Okay, so besides submitting tax return, there's a couple of responsibilities the taxpayer will need to comply. Now we're going to start with employer. Okay. Now as employer, usually you got more rules to follow because the government believes it's easier to control the boss than to control the worker. So that's why the government wants the bosses to do all this. Number one, notify Inland Revenue on commencement of employment. Okay. Within 1 month from the commencement date of a new employment, you will have to inform the Inland Revenue if the employee is or likely to be chargeable. Now that means we are referring to cases that the worker has tax to pay. So let's say you employ a guy. If let's say this guy first time he get a job, first time he's going to pay tax. Okay. Now let's say his salary is about 5,000 a month. You know he's going to pay tax. Okay. Then you have to inform the Inland Revenue. But you employ a guy that his salary is only 1,200 a month. You know that he has no tax to pay. Then you don't need to do this. Okay. So that inform on the commencement is only for those that the employee is or likely to be chargeable. Now, besides commencement, you also inform when there is a cessation. Okay, so again, not less than 1 month before cessation, you have to inform Inland Revenue that the worker is resigning. Now, the law gave an exclusion that basically you do not need to inform the Inland Revenue if you're aware that the employee is not retiring. Okay, if the worker is not retiring from the employment, and then the employee is subject to STD. STD is a scheduler tax deduction. Okay, scheduler tax deduction, or now they call it MTD, monthly tax deduction. So if the worker is on tax deduction, that means you deduct tax from his salary, or his income is so low that is below the requirement of STD, okay, then you do not need to inform the Inland Revenue about his cessation. Okay, turn to the next page. Right, employer also needs to inform the Inland Revenue when employee is leaving the country for a period exceeding 3 months. Okay, any reason. Let's say your boss sent you overseas for work, and he expects that you must be there for about 4 months' time. Now you're leaving for more than 3 months, then the employer shall not less than 1 month before the departure to inform the Inland Revenue that the worker is leaving. Okay, that's your duty. Follow now? But of course, not less than 1 month before departure may not be easy. What if the worker last minute come and tell me, boss, I need to go overseas for 4 months? And then you say, when are you flying? 2 weeks later. Wow, 2 weeks later you tell me. Okay, so in that case, you don't have not less than 1 month already. You see, so that's why in this case, if you can justify to the Inland Revenue that the so-called not less than 1 month is unreasonable, then it's okay. The Director General will accept, no problem. Okay. Then number 2, if your worker frequently leaves the country for a period that's more than 3 months, maybe the nature of his job, he always got to leave the country a few months then come back, then you might as well just ask for a permission from the DG to waive the requirement, so that each time when your worker leave the country, you don't have to inform again. Okay. Now the next one is for worker that he has ceased or about to cease the employment. Okay, or about to leave for a period of more than 3 months with no intention of returning. Okay. Okay. So if there is any of these cases that worker is ceasing employment, or that the worker is leaving more than 3 months with no intention of returning, then the employer is required under this section not to pay any of his remuneration. You hold back the salary. Okay? So under the law, the employer will need to hold back the salary until 90 days after the receipt by the DG the notice. Now that means the maximum period you hold back the salary is 90 days after the notice. Okay. Now, but sometimes the worker will go and settle all the tax issue with the Inland Revenue. Then the Inland Revenue will give you a letter to inform that release the pay. Then in that case, it will be earlier. So 90 days will be maximum. So if after 90 days you never get anything from the Inland Revenue, it's okay. You just release the money. Okay. Now, so that's under 83.5. Okay. Same thing. All these responsibilities that if you fail to comply is an offense. And again, if on conviction you are guilty, standard penalty will apply. Now, not only that, we'll also see when we move on to the collection chapter that if the employer is responsible to do all these things, and let's say the employer never do it. Now, let's say, for example, that the employer is supposed to hold back the salary for a period of 90 days. The employer didn't do it. Now, the worker run away and never pay the tax. Then what will the Inland Revenue do is the Inland Revenue will recover the tax from the employer. So the boss become liable to the tax of the employee. Okay, now that's because you as employer are negligent. That you're supposed to do all this, you didn't do. So that's why now you have to pay for the taxes. Follow? Now all that is employer's responsibility. Okay. We still see on the employer side, page 229. Now, basically, this is the requirement for E form. Okay. Now, if you see the law say that every employer for each year. Now, see the law carefully. We use the word year, not year of assessment. Okay. That each year you have to use a prescribed form to furnish a return using the prescribed form not later than 31st March in the year immediately following the first mentioned year. Now, we didn't talk about YA. Okay, so the word YA must not appear in this case. So the form that we say is called E form. Okay, the form that we say is called E form. Now, when I tell you B form, C form, I mention YA. I say YA 2013. Now, when we talk about E form, you don't talk about YA. Now, let's say we have E form for year 2013. You have to furnish the form latest by 31st March 2014. Okay? Now, what is the purpose of this E form? Now, it's actually a form of internal control to the government. See, the idea is like this. This is the employer, and you have many different employees. Okay? Now, the employer will first fill in an E form. That the E form will serve as a summary of remuneration to all your workers. Okay, I just give you an idea that it will serve as a summary of remunerations to all your workers. So you release out all those workers that they get salary from you with some of the details that the Inland Revenue want, then you're going to fill it in. Okay. Now, then this form you will pass to the Inland Revenue. So let's say the form is for 2013 by 31st March 2014. Now, there will be another portion of the form that we call it as EA form. Okay, now we have EA and EC. EC is for those working with the government. EA is for those working in the private sector. Now, the EA form is a statement that you show the detailed breakdowns of what employee is getting. So that's why the EA is for specific employee to show detail of their income. And then you give it to the worker. Then you will have an EA form that you give it to the worker. So when the worker receives the EA form, the worker will know in detail what they're getting, right? So what the worker will do, the worker will use the EA to fill in the BE. Oops, 2013. Okay? And the due date for BE will be by 30th April 2014. Now, that's how the system works. So that the government will know that in total how much workers are getting. That's through information that the employer furnished to the Inland Revenue. And then the employee will furnish return. So through the information here and the information here, then the government is able to match and see whether you are declaring the right amount. So if here they put here 20,000, here you put 5,000, then something is wrong with you. Follow? Okay? Right, so that's the whole idea why we have this E and EA. Okay. So come back to the law. Okay, come back to the law. Page 229 again. See, under the law to do with e-form, now the law requires in the form we need to furnish information regarding the number of employees employed in the first year. That means in 2013. Okay. The number of employees subject to tax deduction, new employees employed in that year, employees resign in that year, employees resign and left Malaysia in that year. Now, A to E is in the Act. It's required by the law. So this one sure have. Does it say, if those of you who work in tax, you know that e-form, the format has changed a few times, okay? But then all this is something that they always ask, because this is the Act. The Act required employer to inform the government all these things. But the Act also say any such particulars that required by the DG. These are where that at the back, a few more pages of the form, they ask you to fill in, for example, the worker IC number, how much is the worker's pay, and then what's the tax file number. That's the other detail. Now that one, the government wants, the DG wants, anything also can, because the DG can change the format. But the first 5 is fixed by the law. You must follow on, okay? Right, so there's the issue about e-form. Now then we say that employer will have to give EA to the worker. Now this is where they say employer shall for each year prepare to his employee a statement of remuneration of that employee on or before the last day of February, that's the due date, in the year immediately following the first mentioned year. Okay? Now, but of course, we are not very strict about this. Okay? A lot of employers don't follow. They don't follow exactly. Sometimes they are late. But we don't mind, like, as long as end of the day, the workers are able to fill in their return form and then submit the form to the government, we don't make an issue. Okay? But of course, if you don't give it to the worker and the worker come and complain about the employer, then the employer can know. Because under the law, it's on or before the last day of February. So if you talk about, for example, your salary detail for year 2013, then by 28 February 2014, you have to give worker a statement. Okay? Now the statement will show particulars of the worker, full amount of the gross income fall under section 13. If there's any pension, annuity or periodical payment, total tax deduction, EPF contribution, any payments in arrear, any exempt income, and any other particulars that the Director General want, you provide. Follow, okay? Right, so this employer's responsibility. Same thing. If you fail to do any of this, it's an offense. On conviction, standard penalty applies. Okay, turn to page 230. Now, this is a very strange thing, because all the while the form is to give to the government, okay, so that the government will know what is happening. But this one is you don't give to the government, you prepare the form and you keep, and then you give it to the agent. Okay. Now what is this? This is particulars for payments that you make to agent. Okay. Basically, they say if you are a company, every company. So if you are not a company, then it's okay. Okay. Every company shall prepare and provide to your agent, dealer, distributor. Okay, dealer, agent, distributor, a copy of the form that contain all these things. For example, like particulars of the payment, whether monetary or not. Like maybe commission, incentive trip. As agent, you sell above target, I give you a free trip to USA. So that's something that's non-monetary, but still a benefit to you. Okay. Now the name and address of that agent, and any such particulars that the Director General wants. Now then, this form that you fill in with all these details, you should give it to the agent not later than 31st March in the year immediately following the first mentioned year. Just like you give EA form to the worker like that, you give this form to the agent, okay? And then you don't submit anything to the Inland Revenue. You keep the form. The company will keep and retain the form in safe custody and wait until if the Inland Revenue wants, then they will ask you to give it. If you can't give, then of course you are wrong. Because, if they say, hey, I want this form, please submit back to us, then you will have to give it. Now, if you can't produce, then it's an offense. Follow up, okay? Now, so that's basically responsibilities for making commission to payment, commission to agent. All right. Now, next. See, the Director General is given a lot of power in the law. All right, and these powers are very scary at times. Okay. Now, Inland Revenue has power to call for return and production of books. Okay, so in general, they are able to serve you a notice and say, okay, I want to see your accounts. Please bring your accounts. All right. Now, they can serve you a form and say, fill in the form and then return back. Now, there's a power of DG to call for return of books. Now, DG can call for bank statement. So if the Director General wants to know more about your financial affair, he can say, okay, I want to see your bank account. Okay, for sole proprietor, for example, he can say, I want to see your personal bank account also. So he can call for all that. Okay, so you don't think that you can hide your bank details from them. If they want, you cannot hide. They can get it. You see, now they also have power to access building. So power to access building means they're able to search the building. Okay, they can search your building. Come, search, and take away your records. But this power is very scary. If you can simply use this power, we're afraid there's abuse of power. So that's why this power is only reserved for tax investigation cases. So unless you are doing a tax investigation, if not, you cannot simply come and say, I'm the Director General, I want to search your building. You cannot do that. Okay? So what is tax investigation? Now we'll do this when we look at audit and investigation. Okay? Now the next one is DG has power to call for information. Example, he can summon anyone to the Inland Revenue Office and then he interview the person and get evidence. So this is all power that DG has, okay? Various power of DG. Okay. Turn to page 231. Now, as a businessman, okay, any person who carries on the business, you're required under Section 82 to keep records. Okay? Now the rule to keep records is for 7 years. Alright? The rule to keep record is for 7 years. Now you foresee that the rule is going to change soon. Maybe this budget. Because last time we had 6-year time bar. So now they say keep for 7 years. Now the time bar changed to 5 years. So 7 years sounds a bit illogical. That their time bar is 5 years. Here you keep for 7 years for what? Okay? Now never know. Maybe this budget they might announce a change to this. Now, so you must keep record for 7 years. But how do you count 7 years? 7 years from the end of the year to which any income from that business relates. But on condition that your tax return is being furnished. Understand? You furnish your return. Okay, let's say my business for 2012. Okay, so end of 2012. So 2013 is 1 year. 13, 14, 15, 16, 17, 18, 19. So you must keep until end of 2019. So that's your duty if you run business, okay? But that's on condition you file your tax return. What if the form you never filed? Now you never file the form, the 7 year never start. Then later, let's say you didn't file the form. For example, the form you never filed. Then 10 years later, the government come and say, hey, I realize you didn't file the form. I want you to take out the records. We want to see what is happening. You know? They say, wait, 10 years already, I didn't keep the record, I throw already. The law say keep for 7 years only. Then the Inland Revenue will tell you that the law say that the 7 year is on condition you file the form. You never file the form, right? Then the 7 year never start. That means you're already guilty because you're not keeping record. You know? So that's how 7 year come to you. Now, the duty also go on and say, if your sales exceed 150,000, if you sell product, and 100,000 if you offer service. Okay, if your annual sales reach this amount, you have to issue sequentially pre-numbered printed receipt. That means you cannot go and buy Popular or Pasar Malam, that kind of receipt, then take a rubber stamp and chop. You cannot do that, okay? So you will have to issue a sequentially pre-numbered printed receipt that comes with a duplicate that has a sequential number, okay? Now, the Director General has power to serve a notice on a person to have your accounts be audited. Now, of course, this is usually for cases like sole proprietor or partnership. If he finds that, wow, your account very messy, don't know what is this, he can ask you to have your account audited first, then only you submit again to him, okay? Now, all the records for business in Malaysia, you have to keep them in Malaysia. Okay, this is an important duty. So if you fail to keep record, on conviction, guilty of this offense, your fine is 300 to 10,000. You can get 1 year jail, maximum or both. Okay. Now that's only for cases of those who run business. They say, what about you and me? That we don't have business one, we're just an employee. Do I have to keep record? Now you also need to keep record. Now because under 82A, you have to keep documents that you use to ascertain your chargeable income and your tax payable. Okay, you have to keep all these documents. For example, you claim tax relief. You say, oh, I buy books, I claim. I buy computer, I claim. Everything you claim. So you submit all the form to the government that you claim all the relief. Then suddenly the government say, wow, you buy so many things, sure or not? The government call you and say, please fax over the receipt. They say, receipt, why need receipt one? They say, I never have receipt. So this is a problem, because you know. So if you don't keep all these records, then you have two offenses. Number one, you claim something that you can't prove is an incorrect return. We can charge you a penalty for incorrect return. Then number two, you say that you claim because you spend. Now I ask you, where is the receipt? You say hilang. That means you have another offense of not keeping record again. Because you know, so there's two offenses. I can charge you again. So there's that at the end of the day, this is also another offense that you have to watch out. Follow? So you must keep record for same thing, 7 years. Okay? Now all these things, you have to maintain them for a period of 7 years. So if you are guilty of this offense, then on conviction, 300 to 10,000, 1 year jail or both. Okay, so small issue, then probably 300 at least. Okay, the next one is change of address. Now if you change your address to another address, you have duty to inform that the address has been changed within 3 months. Okay, so again, if you fail to do that, there's a standard penalty. Right. So that's all to do with various responsibilities for submitting return. Okay, now we look at this thing called assessment. Now, assessment is an order to pay tax. Okay? There's an assessment, an order to pay tax. Now this order to pay tax is very important procedure, because a lot of things in tax you have to follow the legal procedure. If you don't follow the legal procedure, you find that the rights of the taxpayer will be affected. So that's why assessment is an important mechanism. Now 2 years back, the government proposed a few laws. Include one, they proposed that the government can ask the taxpayer to pay tax without raising assessment. Now that was a proposal, I think it was in budget 2012 if I'm not wrong. Okay. Now that is something that everyone condemned, that the government is doing something very wrong. Now you ask taxpayer to pay tax but you don't give them an assessment. That means you have to pay tax, but if you find that it's unfair, you cannot object. Like you cannot object is very unfair, you know. See, you can ask me to pay tax, but you must also give me a right to object. So that if I think it's not right, I can complain. For example, I can appeal. But they find that they want to introduce that. But again, because too many people complain about that, so it was never successful. Because you know, now, but you never know, one day it might come back. So that's why assessment is an important process. Okay. Now, what is an assessment? Is an order to pay tax. Now, to look at these, we look back into the old system. That we have official assessment. Now really it's only the old system for income tax. Official assessment is still there. For example, RPGT is still official assessment. Stamp duty is also official assessment. Okay, so you don't think that this thing is completely obsolete. No. Okay, it's only income tax we don't do that. Other taxes is still like that. Okay. Now, what happened in the past is like this. The taxpayer will declare his income to Inland Revenue. For example, the return form. Inland Revenue will then calculate the tax, how much you need to pay. Then Inland Revenue will send you an assessment form, the Borang J, okay? The green color one. Then you pay tax within 30 days from the service of the assessment. Now this is the process we do those days, which is highly inefficient. How many taxpayers we have and how many workers they have to calculate our taxes. That's why there are cases that people, after they submit the form, within years or so they don't need to pay tax one, because the government got not enough time to cater for all the taxpayer. So this system is not efficient. That's why we replace it. So now the system that we use is self-assessment. Now the idea of doing self-assessment is basically everything becomes self-service. That as a taxpayer, you will fill in a return form. That the format of the return form is exactly like how you do your tax form. As I showed you before in the front of the notes, that you follow the format like what is called adjusted, statutory, aggregate. So you fill in according to the tax computation. So in the form, you will also calculate how much tax you need to pay. Then you pay your tax. Right, this is self-assessment system. So it's more efficient, right? Because you only go one way. Everything you do it on your own. Now, of course, when you look at self-assessment system, some taxpayer are thinking, wow, like that's so good. I decide how much tax I pay. Then what if I simply tell the government this year I don't make profit? I earn 500,000, but I say I earn 100,000. You can do anything you like. It's okay. It's up to you. It's self-assessment, like I say, no? But of course, the government also need to make sure that they protect the interests of the government. So that in the midst of this self-assessment, where you calculate your own tax, the government will carry out tax audit. That there will be a routine checking of your tax record. That people will come and go through, and then probably they will visit your premise and see your record. Now we're going to see later, I mean not today lah, okay, that how does audit process work, and what's the difference between audit and just now we say investigation. So is there a difference between these two things? Okay, now come back to this. So you talk about assessment. Okay, so understand self-assessment. Now we say already, if you pay tax, you must have an assessment. In the past, the assessment the government will send to you. But now, how do you get an assessment then? Because you submit a return, then you have to pay tax already. Then where is the assessment? So that's where section 90 comes in. The law says that where a person has furnished a return, that means you must submit a return. The Director General shall be deemed to have made on the day the return is furnished an assessment. That's the law. Understand? Huh? And why is this date important? For example, the law says that you can only lodge an appeal if you do it within 30 days from the date of your assessment. So now I ask you a question. What is your date of your assessment? See, you don't know the date of assessment, you cannot know the due date for appeal already. That's why the date of the assessment is what? Is the date of the return. Because the law says the day that return is furnished, then the Director General is deemed to make on that day an assessment. You can see now? Okay? Now, what if a person did not furnish a return? See, if you never furnish a return, then there will not be a deemed assessment, because the deemed assessment is based on the return you furnish. So what if I never submit the form? That's why to protect the government, the law also provides that in the event a person fails to furnish a return, the DG may, according to the best of his judgment, determine the amount of chargeable income and he make an assessment accordingly. That means he can ask you to pay tax according to his judgment. You don't submit also never mind, okay? He can still ask you, okay, since you fail to furnish, then I will estimate that's your income, that's your tax paid. Follow not? Okay? Now, so there's the issue about assessment over here. Follow? Okay. The assessment we see based on this deemed assessment is the original assessment. Now, we have some other different types of assessment. Now, first we're going to see this thing called reduce or increase. Now, usually what's a reduce or increase assessment? Now, let's say, for example, I have an original assessment and that my tax is 25K. Okay, so this is the first assessment I have based on the return that I finished. Now, but I'm not happy with the assessment. Maybe there's certain things I felt that it shouldn't be in that way, that I want to claim deduction, that I'm not sure. So I feel that 25,000 is not the right figure. The amount should be lower. Okay, so I can appeal. Okay, I can appeal. Now, when you appeal, eventually, what's the outcome of the appeal? That whether you win an appeal and that the tax is lowered, or in cases that appeal is lost and the tax is increased. So if you appeal and you win, then there will be a reduced assessment to show that you have less tax. And the opposite comes in, is because you've lost an appeal and then you have to end up paying more tax. So that's called an increased assessment. Okay, so increase is because you've lost and you have to pay more taxes. Now, what if I have an income that I didn't declare in the past and now I'm going to declare? Let's say, for example, my boss has a salary or I have a rental that is meant to be previous year, but I never collect the rental. Now only I collect. So when I collect this rental, the rental relates back to, let's say, 2012. Now it's 2013. Okay, I never declared 2012, 2011. You know. So in that case, I will have to submit and inform the Inland Revenue that I've received an income of the past. Now then, the government will assess again on that extra amount. Now this extra amount that they assess is called additional assessment, and not increase. Increase is when you've lost an appeal. Additional is there's an income that we have not taxed previously, and now you will pay up for the tax. Okay, so additional assessment might be because of reason like you omitted income, so now the income will be assessed, or the government have given you excessive refund that they want to take back the money they refunded, or there's an additional income which has not been considered in the past. Okay? Now there's the issue about additional assessment over here, but there's something I must inform you is the time bar. See, the government has a limit to raise an additional assessment. Okay? We call these as time bar. Now, the time bar is actually 6 years. But then last budget, the government reduced the time bar to 5 years because it's to show that the government is more efficient. We don't need so long. Last time is 12 years. Okay, the old time is 12 years. And you imagine 12 years, how many years must you keep record? 13 years. You see, no? So 13 years to keep record. My goodness, your son from baby enter secondary school already. You know, how long must you keep? So that's why now they are getting better. So they say that we reduce it from 12 to 6, and now 6 they further reduce it to 5 years. But when they reduce it to 5 years, the problem is the effective date is 2014. Okay, the effective date is 2014. So the issue is the law is last year budget one, which is in the syllabus. But then the effective date is 2014. But in the exam, they cannot ask the questions that is dated to the future. You go and see all the past year. You don't have a question that they will ask you to compute tax that is for future one. You never. Okay. Now, for example, last exam is last exam is June 2013. And when they ask you to work out the tax, now personal tax, I have to use December year end, correct? That's why you see the June 13 question. The question is still dated based on 2012. Why not they just design a question based on 2013? But you cannot, because the time has not come. That means you're writing a question that you're predicting the future. So that's why they are not allowed to do that. So that's the reason why when we look at that, then you understand that you won't get a question that's dated 2014. You know? But anyway, this issue is not your concern, because you don't learn things that will involve this kind of problem. Now, it's not like, for example, P6. The P6, they learn gratuity. So I also let my P6 student know, okay? Because they learn things like gratuity. That when you tax the gratuity, you have to spread back over a number of years. Now, that spread back over a number of years, the old law is spread back 6 years. The future new law is spread back 5 years. But we still tell them to spread back 6 years because this is only effective 2014. You understand? Okay? But of course, I don't see that in F6 you're going to get this kind of question. So I want you all to know that the law has changed already. Okay? So that now is called 5-year time bar. Now, what do you mean by 5-year time bar? Okay, let's say I have 2014. Okay? 2014. Now, any income for YA 2014. The last day for anyone, government or the taxpayer, to open the file will be 31st December 2019. You just add 5 from the YA. Understand? Huh? Okay? So the last day for anyone, whether the government or the taxpayer, to come and open a file is 31st December 2019. Now that will include tax audit. Because I said that the government can come and do tax audit. Now tax audit is also subject to time bound. So in that case, after 31st December 2019, let's say the government send you a letter and say, I would like to audit your tax for Y 2014. Then you tell the government, sorry, I don't entertain you because you passed the due date. You see now? So that's the 5-year time bar. Follow? Okay? Now turn to next page. Okay, we have this thing called composite assessment. Now, composite means 2 in 1. Okay? Composite is 2 in 1. Now, what's the 2 in 1? Now, 2 in 1 is the tax liability together with the penalty. They add it together. Now, for example, like they do an audit and they realize that you understate the income. Now, let's say you understate income, your tax understated. For example, your tax understated is 10,000 ringgit. Alright, now together they will add a penalty of 4,005. Okay, let's say so 14,005 is the amount that they will ask you to pay as tax. So the 14,005 is raised in an assessment called composite assessment. So the tax and the penalty is together. Okay, right. Next one. Now the government also can raise an advance assessment. That means the government can assess you in advance before the due date. Now usually an advance assessment is used in cases that you're going to cease having a business. Now you stop your business means you got no money a year. So scared you cannot pay tax. Okay. Now when you commence receiving income, like pension, annuity, or periodical payment. Okay, when you have this kind of periodical income, or when you're going to leave the country that you don't intend to come back, for example, then the government can raise advance assessment. Okay, right. The last thing is this called unlimited assessment. Now, what's an unlimited assessment? Now, an unlimited refers to assessment that the time bar will not apply. Okay? That there is no time bar restriction. So it's called unlimited assessment. Alright? Now, see, when will an unlimited assessment be applied on the taxpayer? Now, it will apply when there's a problem with fraud, willful default. Okay, fraud, willful default. Now, for example, you maintain fictitious business record. You keep 2 receipt books, the real one and the one that you understate, so that you use that to declare tax. The government catch you. You have 2 sets of record book. Then there's a fraud idea. Now, if it's a fraud, let's say this is a fraud backdated way back since 1980. Today is 2013 already, right? But now we backdate all the way to 1980 and we start calculating the tax you need to pay from 1980 until here. They say, then that's how much tax. So they say, but I thought you got what? 5-year time bar, is it? No, time bar will not apply to you because this is a fraud. Okay? Now, but you must read carefully the law. The law uses fraud, willful default, or negligent. Negligent. What is negligent? Your carelessness. Kecuaian is also a negligent. Fair enough? For example, you never submit the return form. Okay? Every year the form comes, you don't bother. You throw it away. Alright? Then you are thinking, wow, I throw. By the time the government realizes that I never submit the form, it could be 5-10 years later. Wow, many years later, then the government will assess tax. The government cannot assess my tax of the early days. Why? Got time bar. Now, that's what you're thinking. But then you think and see, because the law uses the word negligent. Now, failure for you to submit the form is an act of negligence already, right? You're negligent, right? You're supposed to do your duty, but you fail to discharge your duty as a taxpayer. So that's a negligence. So that's why by not submitting a form is already a negligence. And being a negligent, you already fall into the scope for unlimited assessment. So you don't submit form for the past 30 years, then the government can come back and say, okay, all the 30 years, please pay tax. They tell the government time bar, no time bar, because your case is negligent, and negligent is unlimited assessment. You see, no? So this is how the government protect themselves. They're very powerful. Follow now, okay? Right. So all these are the different types of assessment that we see here. Okay. Next one. Now we have this thing called finality of assessment. Now, what do you mean by final? Now, basically, final and conclusive means the assessment cannot be appealed anymore. Okay, the assessment cannot be appealed anymore. That's why it's called final. So please don't come back and say you want to object. You cannot object. You got no rights to object already. Follow? Now, why will an assessment be final? Okay, assessment be final when there's no valid notice of appeal given. See, I give you a time frame to appeal. Okay, we'll learn, like, for example, is within 30 days. Now, in that 30 days, you never appeal. Later, you miss the 30 days. Then you want to come back and tell the government, hey, I want to appeal, can or not? Cannot. You miss the date already. See, the rights is given to you, but you never take and protect your rights. This is your problem, okay? Now, agreement has been come. That means you appeal and you have reached an agreement, and you solve the case already. They become final, okay? Or this appeal has already been determined, so that you have no further rights of appeal. You can't appeal already. It's done already, okay? Or there's a valid notice of appeal. So the appellant submitted a notice of appeal and he wanted to appeal. Unfortunately, the appellant passed away. Of course, after appellant passed away, we allow you to have someone to come and continue. We give you 2 years. In 2 years, if no one come and continue the appeal, then it's considered final. So as well, once the appellant dies, when there is no personal representative of the estate of the deceased person within 2 years after the death, then it's called final. Then you stop there. Follow? Okay? Right, so there's final and conclusive. Now, final and conclusive refers to cases of appeal. Okay, 2, 3, 4 is about relief in respects of error or mistake. Now, what do you mean by relief in respects of error or mistake? See, in the tax return form, if you've made a mistake, okay, let's say, for example, tax relief. Let's say the relief is supposed to be 5,000 ringgit. You didn't know. You thought it's 1,000 ringgit. So you claim a lower amount. So you genuinely made a mistake. Okay? It's 5,000, but I claim as 1,000. That means I lost 4,000 relief. If my tax rate is 20%, let's say 4,000 is 800, so I overpay my tax law. So as a result of this, can I do something to correct my mistake or not? Now, that's where section 131 comes in. Now, they say that if a person has paid tax, you have paid your tax, and it's excessive by reason of error or mistake. That means the tax is too high because there's error or mistake. Then same thing, within 5 years from the end of the YA, because the time bar is 5 years, but the 5 year only starts 2014. Now it's still 6 years. Okay. Now, so you find that within 5 years you can make an application from the DG that there's an error and you want to correct the mistake. So the Director General will look into the matter and find that if this is correct, he will then return the money to you. Because you're not, so he will give you a repayment of tax if the error or mistakes appear to him just and reasonable. Okay, then no problem. He returns back the money. Now, see, the law says that you've paid tax and it's excessive. That means your income is higher or lower? Your income is higher, but it should be lower, right? Now, this is the problem. Now, what if I have the other way around? What if I have paid tax and my tax is too low? For example, my relief is 1,000. I claim 5,000. Cannot. Can also, right? Especially if before this you don't know the penalty is so scary one. Then after you learn it, wow, you regretted all. That you simply claim relief for book and stuff like that. You regretted. So how? Can I use 131 or not? Now there's a problem with law. Law say you paid the tax and the tax is excessive. Your problem is you've paid the tax but the tax is insufficient. Then you cannot apply 131. You're not in line with what the law says. Now that's why now the government think of a solution that it works both sides. You pay too much, you can claim. You underpay, you can make correction. Now to make correction when you pay not enough tax, we call it as a self-amendment of return. If you pay too low tax and then you want to increase it, then you do a self-amendment of return. Okay? That means you admit first lah. You admit, then you pay back. So that your penalty is not that bad compared with if later they catch you, right? No? So you admit first. No? But you think and see, if everyone start using this system, initially purposely say I earn very little. Then after that go and declare again and say, oh sorry, I made a mistake, now I pay you back the difference. Wow, if everyone start to do that, then the government will lose interest, right? Correct? No? That's why the government also, they must think of a way that you don't abuse the system. So the way is very simple. You want to do a self-amendment of return, can. You do it in such a way, whatever tax you pay later, you must also pay a penalty for late payment of tax. So that the late payment penalty is like an interest you give to the government. Okay? Now how do you calculate a late payment penalty? Okay, first, if a return has been made, you can only make an amendment to the return by way of amended return. Okay? Now this amended return shall only be made after the due date for furnishing the normal tax return, but then not later than 6 months from that date. Okay, my B form for Y2012, what's the due date? 30th of June 3, correct? Okay, so if you want to file a amended return, the earliest is 1st July. You cannot do it before that because they want to make sure that there's a late payment. Okay, you must file after that so that now is considered a late payment. Then only it's right for them to charge you a penalty. But you cannot go more than 6 months from that date. So by end of the year, that's the period. So what if you say, I only realized this in 2014, then sorry, you cannot use this system. Then you have to use another system. Then the penalty is higher. Okay? So end of the day, we give you some ways for you to admit your mistake, but the only difference is penalty is higher. Now, so this amended return, you will need to specify how much tax that you need to pay, and you also need to specify an increase. Now basically increase over here is i.e. a late payment penalty. Alright, the increase is actually a late payment penalty. Okay, how does government calculate late payment penalty? Now, if you miss the due date 30th of June, if you miss the due date 30th of June, after that you pay a tax, we will increase the tax by 10%. Okay? And from the increase of 10%, we give it 60 days to settle. You miss the 60 day, we increase again by 5%. Now there's a late payment penalty. And the way they explain the penalty here is exactly the same. So I don't want to go through the law. I just tell you how it works. Okay? Now, example. Okay, let's say Michael submitted the B form for Y12 on the 12th of April 2013. Now, look at the date. It's very early, right? You have until June, right? Not? But then in April itself, he done everything already. He submitted. Now on the 12th of May, he realized that he omitted certain income that the additional tax on that income is 1,009. So the B form submit early, but he realized that he made a mistake. So how? The earliest that he can apply to furnish an amended return is on 1st July 2013. You have to wait until after the due date, right now? Because B form due on 30th June, so you must wait until 1st of July, then you file it. But when you file it on 1st of July, the extra tax you pay is 1,009, but you must increase by 10% because it's a late payment penalty. But you don't call it a penalty, they call it a tax increase. Okay? Now, so this amount is 10%, which means in total, you have to pay 2090. Now this 2090 is only if it's within 1st July 2013 until 60 days. Okay, 60 days. So you calculate for me is until when? Within 60 days. July got 31 days. Okay, so 29 of August. 31 plus 29, 60 days. Okay? Now, so from this date till this date, you pay 2090. But if it's after 29 of August, then we will increase again by 5% on top of the original amount just now. So you got to pay 2194. That means if it's between 30th of August until December 13th, then that's the amount that you got to pay. Okay, right, so that's the issue on return and assessment. Okay, that's the first part of the tax admin. Right, we finish here lah. Okay, so we start the next chapter next class. So I'll see you again next Thursday.